Hello and welcome to Real Estate Simplified. On today's show, private lending. How does it work and what is the role of the brokerage? Joint ventures can help you scale your portfolio, but how do you get started with a partner? And what effect is the hot real estate market having on lending? Stay tuned. Welcome back to Real Estate Simplified. I'm joined today by Sami Juneja, mortgage agent with iBridge Capital, and Jacob Perez, real estate investor and mortgage agent with Synergy Mortgage Group. Welcome to the show, guys.
Thanks for having us.
Thanks so much for having us.
So, Sami, let's talk about private lending. And I think there's a lot of misinformation out there about private lending. Can you just tell us what private lending or alternative lending is all about?
Yeah, definitely. So the private lending space has changed a lot over the last few years, and it's almost not even a term that's being used because there's so much institutional funding which is going in to help these borrowers. And these are borrowers who are not being helped by their bank for a few different reasons. And those reasons could be they've got distressed credit. It could be that the property is distressed. It could be that their circumstance does not qualify for traditional financing. And for these reasons, the private lending or alternative lending space has been growing rapidly year over year. And we're going to continue to see even more growth within the market.
Yeah, and you mentioned institutional lending. What does institutional mean?
Sure. So institutional lending would be, for example, any of the 5 or 6 major banks that you can kind of walk in and get a mortgage on your own. And then you've got the alternative lending that are also institutions, and they're not funded by private investors. These are people who are getting funding elsewhere, and they're also lenders who are providing mortgages to clients at slightly higher rates or also providing additional risk elements to these borrowers.
Yeah, and one of the things we talk about when we speak about lending is fitting inside the lender's box. Yeah. So would it be safe to assume that somebody seeking out private lending would be an out-of-the-box approach?
I think the box gets bigger, for sure, and I think that more and more boxes are being put in place as an influx of investor money is coming into the private lending space. We're seeing a large surgence of mortgage administration companies and mortgage investment corporations, and even them, they do have a box. And then there's the true private old school mom and pop lenders who are lending to borrowers who are completely outside of even those boxes.
Yeah, and what sort of people or situations would look for private lending as opposed to a traditional mortgage with a bank?
Yeah, so we funded several files just this past month, and I can tell you a few situations. One of them was a home which nobody would do financing on. The gentleman had to go in and get private financing. We arranged the financing. The gentleman who was working on it was actually a contractor. He rehabbed the property, he kind of fixed it up, did some cosmetic changes. He did what's called like a value add strategy. And a lot of banks are not great at financing those properties, but once the property's brand spanking new, everybody's all over it, and then he's able to get finance back with his Big 5 bank.
Yeah, and you mentioned that value add approach. Obviously, if the property is vacant or there's issues with it, private lending can be a great tool to get in there, get the work done, and then you're seeking out that longer term debt with the better terms and lower interest rate.
Yeah, bang on. So private lending, the best way to approach it is it's a lending criteria which is based on equity. So whatever the value of the property is how much that the lender is comfortable lending out. Many of the banks and traditional alternative lenders are looking at a combination of income, how much income do these borrowers have, can they support the payments, and also does this person's net worth justify them to be considered a qualified borrower. So those are the two major differences between institutional financing and private financing. And as you mentioned, the value add approach is something that's never going to go away, and it's something that is great for private investors, but also great for the borrowers who are adding that value and then using the long-term debt to take advantage of pulling that capital back out.
And what happens with the brokerage? What does the brokerage do, and what is the brokerage's role in that transaction?
Yeah, definitely. So the brokerage's role is one of making sure that all parties involved in the transaction are protected. Our job as a brokerage is to provide transparency between the lender and the borrower. Our job as a brokerage is to ensure that everybody's best interests are at stake and are being taken care of during the transaction. We do this through a series of disclosure documents. We do this through a very intense process of understanding the client's needs, understanding what they are getting themselves into, providing them with the full support and guidance that they need to get from end to end. And typically the job of any mortgage brokerage would be to identify what the client's goals are and kind of follow through on that, and then continue to follow through, not just at the origination of the mortgage, but throughout the entire life of the mortgage or debt.
Mm-hmm. And on the flip side, we have the person receiving the funds, but then who's giving the money? Like, where does the money come from for these private mortgages?
Yeah, so in these private mortgages, as I mentioned, there are a number of institutions which has opened up over the last few years, and these are funded by large corporations and institutions, but a lot of the times the investors that I typically deal with or that are in my portfolio are individual mom and pop investors who are looking to get a great return on their money. They're looking for real estate-based financing. They're looking for collateralized, secured investments, and they are typically, what we would like to call an accredited investor, which I won't get into for our purposes of not knowing where all of our listeners are going to be. But, I would say find out with your jurisdiction or find out with your financial services office and figure out what is an accredited investor, and you'll kind of be able to figure out who is funding these private mortgages.
Yeah. And there's lots of advantages of funding these mortgages because it can be a lot more passive. Obviously you have your due diligence, but it's not like you're picking up a hammer and actually doing a whole bunch of work on the real estate.
Yeah, so the way that I look at it is you're still investing into real estate. You're just not technically dealing with the headaches of a tenant. You're not going in there and taking responsibility for the entire dwelling like you would be if you were a landlord-tenant or a typical relationship. And the returns can be quite significant. And like I said, it's not money being thrown into a stock market without any collateralized security against it. So it's very, very lucrative for a lot of our investors.
Yeah. And just to add to one thing Sami brought up that I thought was a good point is, you're investing in real estate, but you're also investing in people, right? I'm sure you have a lot of mom and pop lenders who they've lent to that investor before who's flipped 3 or 4 houses in the last year. So sometimes there's a little bit of a personal relationship where someone's actual real life credibility and real life case studies of success they've had actually goes towards improving their lending conditions and their lending terms and things like that.
Yeah, no, exactly. What we're seeing very commonly now is private lending money being used towards fixing real estate or rehabbing properties. And a lot of these investors want to work with repeat borrowers. Mm-hmm. And what they'll do is the relationship starts to take way in that it's no more just about the return. It's about how well can I preserve my capital and how passively can I do it without the headache.
Yeah, and any investor will tell you it's all about preserving your capital. If your capital disappears, it's game over.
Yeah, the return is not as important as your capital is.
That's right. Well, that was great, guys. So coming up after the break, how joint venture partners can help you scale your portfolio. Stay tuned.